Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, February 5th, 5:14 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Market state, we're in an uptrend since the follow-through day back at the beginning of November. Check leadership over here. We've got a few mildly concerning indicators on here. Market leaders still acting well. In fact, much better than the indexes, but the market's getting top heavy. AI, anything AI related or weight loss related, for the most part, is what led today. But onto the indexes, the small cap Russell 2000 closed below the 50-day moving average today and has multiple closes below the 21-day, and the slope of the 21-day has rolled over. Mid caps also with their first close below the 21-day. Here's the small caps below the 50-day. That's our medium term moving average. So how do corrections start? Well, they start little by little. You start breaking key levels, and then the slopes of those lines roll over. And before you know it, leadership starts to sell off. And one of the indicators that we kind of started talking about last week, breadth, really has not been good recently at all. So a couple of yellow flags on here, but for now, leaders really, for the most part, holding up, and NASDAQ 100 and S&P 500 firmly above their 21-day moving average on the strength of those big leading stocks. So what happened today? As I mentioned, weak breadth, narrow leadership, and small cap breaking the 50-day moving average. Here are the final numbers. Big 7 up slightly, about 0.1%. RG8 down, led to the downside by ARK-K, which was down 3.1%, but the average down 0.90. S&P 500 opened down about 0.15%, as Jerome Powell was hawkish last night on 60 Minutes. We'll talk about that momentarily. Closed down 0.33%. Possibly the most important, one of the most important charts to keep an eye on is the RSP here. This is the equal weighted S&P 500. It undercut but reclaimed the 50-day moving, or the 21-day moving average by the end of the day today, but still down 0.86%. NASDAQ 100 down the least of the big 5 indexes, down 0.13%. Equal weighted down 0.14%. Dow down 0.7%. Mid caps down 1.1%. Russell 2000 down 1.3%. Global 60/40 down 0.49. Bonds worse than stocks today, and that's again, yield spiked with Jerome Powell's hawkish appearance on 60 Minutes last night. In-house GROTECTION, nice day, good day for the good guys, led by Lilly, Uber, and Nvidia, leading names. So doing the job for us. Let's get on to the names. But first, I want to start with our earnings calculator, and we had to trim a little bit of Lilly today because the earnings calculator indicated the max size based on the market maker move and the price. If you hear my dog whining, please ignore that. I've got all of them in here with me. One of the other poor little dogs is in the ER overnight with an obstruction. Anyway, max size for Lilly, 8.23%. We were up because it's a high price stock. It was like some accounts had as much as 9%, some were some slightly less, but we've got a rebalancing process in here, and we reduced just a bit of Lilly, about 4% of our total position, to get down to where if we hit the -2 to the downside, we only lose 1% of the portfolio. We'll have a similar decision to make for Uber tomorrow. Lilly reports earnings before the open on Tuesday, Uber before the open on Wednesday. All right, let's get over to the charts now. Here you can see an inside day on the S&P 500, closed in the upper third of the range and held the 8-day moving average. NASDAQ 100 closed at the top of the range, also an inside day. Good performance there. Dow Jones Industrial Average Down, undercut, reclaim the 8-day exponential moving average by the close. Now here's the troublemakers. Here's MDY below the 21. 21 is flat, still holding the 50-day moving average, and IWM. Upper part of the range bounced at the 190 level. There's a big confluence of support under this 190 from some volume weighted averages that either Ted or Connor talked about in one of our recent video podcasts. But for now, it's a close above the still uptrending, and that's good, 50-day moving average. But you can see the 21-day moving average, the green line has rolled over now. Let's look at RSP quickly. This is equal weighted S&P 500, undercut but reclaim. 21-day still in an uptrend there. But note the terrible, and this is really bad, relative strength line. The relative strength line on this is below where we were when this was trading back here at like what was the close that day? Like 144-ish. We're up at 157 here. So the charts can really be deceiving. You've got to have a relative strength line on there. All right, let's go to the VIX. VIX down 1.3% today. It's kind of what we want it to do. The dollar was strong all day and breaking out. This is not good for names, definitely for stocks, definitely something we need to keep an eye on. You can see that clean breakaway from this 2+ week digestion that it had going on. Definitely something we're keeping an eye on. Gold, because of the strong dollar, down a little over 0.5%. GDX, gold stocks, down 2.36%. Bitcoin, doing a kind of a nice gentle pullback here, holding above this 20 level, below the moving averages, but it's more of a pattern consolidation than moving averages that we're keeping an eye on here. On to bonds, yield spiked. That means price is down 0.79% on the broad bond index, long bond index down 2%. Move up on the 30-year, up 2.79%. So this is a Morningstar pattern, and it's an exhaustion and bounce pattern. It's happens when you are having a downtrend. You get stretched to the downside. It's a 3-candle combination, and then follow through today to the upside. And again, that's not good for stocks. TNX 10-year, same setup. All right, let's go to the tail of the tape. That's all our inter-asset correlation. ISM services came in above expectations, and if you're looking for a rate cut, this is not going to get us there. Between that and Powell on 60 minutes is why rates were up today and stocks under pressure. So 2 up days, 1-day consolidation on the S&P and the NASDAQ 100. Third close above the 80 EMA, 21 above the 21 EMA. From a sector standpoint, semiconductors, tech, and healthcare, led by the weight loss drugs, were strong today. On the downside, uranium, gold stocks, ITB, that's builders because of rates being up, KRE, regional banks, and then a host of sectors down. B, basic materials, C, communications, Y, discretionary, U, utilities, RE, real estate. We trimmed some more SSO. We did that when the RSP broke the 21, although it did reclaim it by the end of the day. And also that Lilly trim for oversized positions, as I mentioned. So little pullback in our adjusted beta from 1.41 to 1.3. Bottom line on the day, isolated strength, but weak breadth continues. Small caps breaking the 50-day moving average. Let's get to a couple charts. Palantir after hours looking nice, up 17%. This has traded so many shares, it's tough to make progress, but we have seen in the past how it can run after earnings reports. So that's something we'll be keeping an eye on tomorrow. Lilly reports before the bell. It's up more after hours, up another percent after hours. That's an all-time high. You can see the strength going into earnings, almost like somebody knows something. That's just fine with me, with this being our largest position. Uber, also a good day today in a down market. Ran into that 70 level and pulled back a little bit, and NVIDIA continues to be a beast. Second gap up, approaching that 700 level. Seems like just yesterday that people were saying when it broke above 500 that it couldn't get anywhere because it's too obvious. Just follow price, not anybody's opinions. But the king of the market right now continues to be SMCI. And again, this is equipment for data centers, and mostly AI data centers, up an incredible additional 14.4% today. Just an absolute beast. NBO, the other weight loss drug, they bought a company that's going to help them produce more of their drug. So, hey, you can see that up after hours also. And with that, we're going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner, email Dan Stewart at dan@revereasset.com. And remember, it's not how much you make in the markets, it's how much of that you can keep. So we've got our stops in place now. Our downside is about 5.5% from the gains of this big move that we've made. That's if all of our stops would get hit simultaneously tomorrow for some miracle. That's what the drawdown would be. So we know what our downside is. So that's the protection part of GROTECTION. But until then, we'll continue to grow accounts while we ride this wave that started back at the beginning of November. And with that, I'll wrap it up for Monday, February 5th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Send some good thoughts to my little puppy that one of the sweetest dogs on the planet, and hopefully she passes this whatever it is that's obstructing her. Thanks for listening, and have a great day.